Alright traders, we are back again with another video, and in this video I am going to look at the Ethereum US dollar trade setup that we had talked about and posted in the members section. A matter of fact, I posted this video on YouTube for a few days, and then now I had taken it off, but I'm going to go back and show you how that trade's turned out and what we first started talking about the trade, because a lot of times people think that you're just talking about stuff from hindsight, but I want to show you how this stuff plays out. And the reason it plays out as it does is because, first of all, we look at signals and we look at levels and we look at triggers. So the main thing that I trade is a level, signal, and trigger. If I don't have a level, signal, or trigger, I just don't take a trade. All right, but therefore I do have that stuff, and that's when I take my trade. All right, so we were looking at this level, and this is the 4-hour time frame. We were looking at this level right here, where the market bounced right on the Tinkinson level. And I'm using the default settings, all right, and then you could see the Kijinsen here, and you could see the angulation of the market, and this candle here was a rejection of Tinkinson right here. And you also had the same thing here. We didn't quite hit the level there. A lot of times when you don't hit the level, and this was another opportunity, if you had missed this opportunity, you could have taken this opportunity here, because we rejected this Tinkinson level. As you could see, this Tinkinson level was following the market. The market loves to follow this level, and as the market rejects this level, you take trades off of this level, especially the nice rejection candle. So we look at the level. That's the one thing we want to trade. The signal is another thing that we look for. So we look for a rejection candle. We look for, I trade inside out. Also, we could trade engulfing candles, all kinds of things that you could look for a signal. All right, and then your trigger is usually the close above that level, or the high of that level. You put an entry order in. So we had our entry set at this level prior to the market getting to that point, and I'm going to go back and show you. And then we had this level here also, where we could have taken a trade, but we had already talked about this trade. I didn't update this trade here, but that felt like we already were in the trade and we didn't need to really talk about this opportunity. So let's go back, look at where we were talking about, because our target was this level here. This was our stop loss. The red is our stop loss, and the green is our target and profit area. Now it doesn't look like we're going to exactly hit our target here, but the market's still continuing to move, so you're probably seeing just a new correction. So there's more levels that we'll start looking at for the market to correct and then continue to the upside. So I do see a couple good opportunities to still get back into this market once we get the correction, which we probably will more than likely. But your first level will be your Tinkinson level. Look to see what the market does when it gets back to that level. And if it's setting up for you and giving you a signal, then you get into the trade at the Tinkinson level. If it violates Tinkinson, drops down into the TK zone, which is your Tinkinson and your Kijinsen, between this level is your TK zone. If you're inside that zone, watch for your setup and then to move to the upside. And then we also have our levels that we love to trade, which are our fractal levels. All right, so let's go back and relive the beginning where we talked about this trade before it even happened. All right, so just hold tight and we'll look at that really quickly, and then I'm going to give you an opportunity, guys, if you just want to see this stuff every week. Cryptocurrencies, forex, we're starting with our options trading, all kinds of things. We do stock trading. So if you want to also have the opportunity to see this stuff at least once a week, to see setups and opportunities, and just become a member. You know, have the elite member for 1 year, no reoccurring fee, and not a really expensive price. All right, so to give you an opportunity to see this stuff, see these videos that I post, because I don't post these all on YouTube. You'll get a chance to see these videos. You'll get a chance to see trade setup specifically per pair or per asset. You get a chance to be part of our chat group, our forum, like I said, the daily and weekly webinars, and so much more. You also get our courses. You know, every course that I have, you'll have access to those courses. Those courses help you specifically to understand and learn how to trade Ichimoku, price action, and fractals, and support and resistance. Those are the aspects we use to get into these trades and the things that we look at to take these opportunities. So if you want to become a member, just go to my site and look up on the site. It says membership. Become a member and you could receive this stuff all the time. So let's relive this video, this trade setup that we were talking about. Other than that, it's not much. I'm going to go with the next pair here, which is the Ethereum US dollar, ETH US dollar. This thing is getting ready to give us an opportunity, maybe. I mean, it took off here. You broke a fractal here. If you got in here, you're pushing your luck. Then the market's going to pull back. So on the daily time frame, I'm looking at this. I see that level. Here's the fractal level that we violated, so we want to see if we're going to pull back to it. Looks like you got an indecision candle here. Could be some movement to the downside. Let's see what divergence looks like. We don't have any divergence, so it still looks like this thing is strong. Maybe we'll get a small pullback here. All right, because we may not pull all the way back to this level, and we may not get back to Tinkinson either. All right, so let's go to the 4-hour time frame. So based on the 4-hour time frame, I like what I see on the 4-hour time frame, but the daily looks kind of like an indecision candle, but it's not closed yet, and indecision candles does not state a reversal. It's just indecision in the market at that time, but a good possibility when it's at a level. We're not at a level here. All right, our level is right here, and if the market doesn't come down to our level and continues higher, we have a good sign, because we had a nice sign here, a bounce off of Tinkinson. You had a hammer here, a nice rejection candle, enter at that level. Now you have an indecision candle. My entry would be just like this. I would put an entry in here, and the market's probably going to fail you if it closes below this fractal here. All right, and then it could come back into this zone. If you don't win here, watch for it to come back into this zone. All right, because if it comes back into this zone, this may be where it bounces and goes back to the upside, because based off of the daily, that's the fractal level we're looking to pull back to, and that's where your Tinkinson, Kijinson, well, your Tinkinson level is. All right, we were flat here, then we had a little movement. You can see we got a little angulation on everything, so there is still some momentum to the upside here. There's no divergence to signify that the move is weakening, so there's a good possibility of catching this to the upside. So we're looking here. This would be our entry, so I'm going to draw it out for you. A lot of times I'll use this. This thing sometime is good. Now finding my target is the tricky part here. So you see where my entry is and how I'm trading that. I go to the daily time frame. See, this is where it's hard for me to judge my level, because we have nothing to our left. Usually like to look left to find support and resistance levels that we walk and follow with the market to see if we can take profit there. So therefore we have to watch the price action right off the bat. But the thing is here, I would have expected at least the market to pull back. Then we look for the trade to the upside. But if the market's not going to pull back and it's going to give you an opportunity on the 4-hour here, then I would take it. So watch this candle close and then watch what the next candle does. If the next candle closes above that level, you could even trade this level. And if it closes below one of these fractals, that's where you would lose. You wouldn't lose. You wouldn't have a big loss here. All right, and then you would let the market settle out and come back to this level. This is where you look to go back to the upside long. Ichimoku signals are all long, so this kind of like a counter trend trade basically, because if we trade it to the downside, it'd be a little counter trend trade. But where we are now, looking for it to move to the upside, that's with the strength of the market. It's just a matter of, is the market pulling back or what? So far, it looks to be honoring Tinkinson, and when it's honoring Tinkinson, it's a strong market. All right. So that's what we're looking at with the Ethereum US dollar.